Im westaustralischen Kalgoorlie findet erneut die Diggers und Dealers statt. Dieses Jahr feiert sie 25-jähriges Bestehen. Ein weiterer Grund für den Miningscout, den weiten Weg um die halbe Welt in Kauf zu nehmen, um hier mit Explorationsfirmen und großen Bergbaukonzernen das Gespräch zu suchen, Minenanalysten zu treffen und die deutschen Investoren über Entwicklungen im australischen Bergbau und andere Projekte zu informieren. The mood at the conference is very good. There appears that the companies have more confidence that money is getting back into the sector. What is your opinion on that?
Well, it's been quite remarkable, the turnaround from just 12 months ago when we seen companies were on their last legs, really. Cash at bank was less than $1 million in many cases, and they were struggling to raise capital at prices way below their 12-month or multi-year highs. But now we're seeing this year, thanks to the gold jump in the gold price and also interest in lithium stocks and to a lesser extent graphite stocks and even zinc stocks now, companies are beginning to raise money once again at increased levels. We're seeing a lot of capital raisings in the last couple of months. Closed heavily oversubscribed, and certainly the mood in the exhibition space is one of positivity and one of excitement that perhaps we're in a period of growth again for the sector.
So where do you think is the money coming from? Is it from more the institutional investors, the smaller retail investors that are more risk-friendly now?
I think so. I think it's a little bit of both. I think certainly the research coming out of the institutional investors suggests that there is an interest in the sector again. I think particularly they've seen fantastic gains and fantastic profits from their interest in the likes of Northern Star and Evolution Mining in the gold mining space, and now those profits are being reinvested in some of the developing players. There's certainly more of an appetite from institutional investors to take on earlier stage projects, still at the development stage, but certainly higher risk projects that aren't in the development. From a retail perspective, that has really been amplified. A lot of retail investors in Australia have made good profits in the last 6 or 9 months on their gold stocks, and now they're seeing opportunity all over the place. I mean, even the nickel players in the last 2 or 3 months they've bounced around a fair bit, but they're seeing fantastic gains off the back of improved nickel prices. We're at 14-month highs and so forth, and so there's a real appetite. After 3 years out of the market, it's a sentiment-driven sector, and we're really seeing a greater enthusiasm from the retail sector as well.
So do you think it's more the national retail investors, or are let's say the Asians buying more in these times?
I think at this stage it's still the domestic retail investors. There's certainly a growing interest from Asia. I think a lot of the Asian retail investors were burnt quite significantly towards the end of the last boom, particularly in the iron ore and coal investments that they made, but they're becoming increasingly interested in gold and in the base metals, which is an interesting trend for the sector. And I mean, I don't think we're going to see a return to interest in the bulk commodities anytime soon, particularly from Asia, but I think gold, base metals, and then lithium and graphite, which particularly Asian investors have a particular vested interest in, will see significant interest in the next 6 to 12 months.
With regard to diggers and dealers this year, we have an uprise in the gold price, we have a lithium boom that revived some of the companies. So what do you think is the mood this year?
I think it's a very strong mood at the moment. I've sat in a number of presentations and have been talking to a number of my contemporaries and CEOs in this junior to mid-tier companies, which is very much the focus of diggers and dealers, but a wonderful forum and opportunity here. You know, we have some of the majors here, including Rio Tinto, but some of the others aren't here. The mood is very upbeat, and the mood is very upbeat, I suppose, predominantly because of that very strong gold price in Australian dollars, more so than what you may find in other parts of the globe. There's been an increase in the US gold price, that would be the Canadian gold price, but Australia, with a currency that has come off a little bit, has created an environment where that margin in the gold sector is significant. It also comes at a time when the gold price tends to be stronger, when the currencies tend to be weaker, and we're a resource-denominated country really to a large extent, and our currency has come off therefore, is that with all of the other complexities and geopolitical complexities in the world, and political instability or confusion or uncertainty, and various other factors and negative interest rates in real terms, you're finding there is a flight to gold at the moment, and a store of wealth very much so, and no more so in Australia. It's also with the backdrop of that in an environment where, because we don't have booming economies generally, like we may have experienced 3 or 4 or 5 years ago, is that costs, there are pressures on costs. So costs of unit costs and absolute costs, whether it be oil prices, whether it be people costs, other costs, have come down. And so you're sitting, especially here in Australia, in an environment where the revenue line in Australian dollars for a gold producer has gone up significantly, substantially, and at the same time the unit costs or the absolute costs have gone down, because there is pressure on cost because we're not in a boom time environment. So the margin has exploded. And we've seen many presentations here where many of the gold companies have come from potentially near-death experiences to being worth billions of dollars. And St Barbara was a company that 24 months ago was at 7 cents a share, and today's trading at $3.20 a share. So extraordinary. Now that was a unique situation where maybe it was too extreme, but many of the other companies have had margins and they've increased, you know, 3-fold, 4-fold, or 5 times value increase in the last 12 to 18 months. It's been quite extraordinary. I think so the mood therefore is excellent. You know, the mood is very upbeat. It's sometimes when you're not in that specifically focused entirely in that part of the sector, it's sometimes a bit more difficult for the other guys looking at, you know, who is shining at the moment. But look, they're having a wonderful opportunity, or a wonderful time, and a wonderful opportunity for those gold guys at the moment. So I think the mood as a consequence, and very much a denominated gold part of the world, Australia is the second largest gold producer in the world, is it's wonderful for the conference. It's wonderful for investment as well. People, you know, it's at a difficult time in the market where people are not sure where they should put their money. What should they invest in? Should they invest in, US dollars? Should they invest in property? Should they invest in a variety of different things? And I think what they've found is, when we've seen things like Brexit, when currencies fallen 10% in one day, we see negative interest rates, negative real interest rates, and you go, well, where should I put my money? There's a lot of turmoil in the world, as I said, politically, but also from many other unstable and unpleasant things occurring in the world, and that also creates an environment where people feel anxious and they want to find a store of wealth, and they want to find something that's transportable and that they can see it. And so I think gold is satisfying that to a large extent for a lot of people.
As editor of the Mining News, what is the special topics that you're looking at Diggers and Dealers? There's a lot of companies presenting here. You have a lot of gold companies, you have some copper targets. Most of them are located, the companies are located in Australia, some of them in Africa. So what topics are you looking at especially?
Well, I guess consolidation in the gold sector is always a big theme around Diggers and Dealers. With the sheer volume of gold companies presenting, and also the improvement in the Australian gold market in the last year, I think it makes for an interesting discussion on, everyone has a strong balance sheet, who's buying who, what are the key focuses for these companies? Are they focused on organic growth, paying down debt, merger and acquisition activity, exploration? It's I think the sector is so hot at the moment that it's there's plenty of topics to explore within that sort of gold sector.
So you're looking for the junior producers just for overtaking targets, or targets to be overtaken by the majors, or are you looking at them especially for the hot story for the new producer of tomorrow?
A bit of everything, actually. There's a few really good up-and-coming gold stocks like Dacian, Gold Road, that have massive market capitalizations. We're talking half $500 million, and they're not actually in production yet. Some would say those stocks might be too expensive to be taken over at this point. But yeah, there's sort of the next company, and then there's sort of junior producers like, Millennium Minerals, who, their share price was 4 cents in November. Now I think it's closer to 30 cents. That operation was sort of troubled in the Pilbara, and now it's sort of turned around, and everyone's making good money. So I guess that leads to the question, well, what next? What do you do with the money? I guess increased dividends is another topic as well. But yeah, I guess it's looking for that next big success story, from right down from the explorers to, is anyone going to take a look at Barrick's stake in the super pit? So it's sort of, it's across the spectrum, really.
Okay, so Diggers and Dealers is mainly focused on gold, but lithium is running hot as well at the moment. What do you think about that commodity?
Well, lithium's an interesting one because you have these sort of underlying estimates of, massive growth. Obviously you've got companies like Tesla, which are really sort of, hip companies. Europe's sort of, Europe and China are sort of making the move to electric vehicles. We're probably a bit behind here, but that'll come. So I think with lithium, it's tough. I think the demand story is definitely there, but we've had this sort of mini boom in lithium, on the ASX. I'm sure it's probably the same in Toronto, where companies have just flocked, to peg ground that may be prospective for lithium. And they've had massive share price gains, but, it seems like a little bit of a bubble on that sort of speculative end. So, companies like Pilbara Minerals, who are presenting tomorrow, they've got a big market cap, but they've got, a study coming out for their Pilgangura project in the Pilbara. So I think, companies like that will do well, but there's a lot of smaller companies that are probably just riding the wave at the moment.
How does the Geological Survey of Australia, of Western Australia, as a part of the department of the government, support the mining industry in Western Australia, help them develop new targets and find new mines?
Albert, for over now 120 years, we've been producing maps, geological reports, geological maps, now databases and so on, that are used very much by industry and members of the public to some extent for their exploration targeting, both in minerals and petroleum. We have a number of schemes as well, that special government funding, which is available even to offer subsidies for exploration drilling by companies. We fly extensive airborne geophysical surveys in Western Australia, deep seismic lines, a whole range of geophysical, geological, geochemical techniques are applied, and those data are provided usually free of charge to industry.